The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the July 2nd, terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. So let's go look at one of our tools. This is the tool that I call Material Progress Needs Entrepreneurs. You know, the pyramids of Egypt are one of the 7 wonders of the world. The Great Pyramid near Cairo can accommodate the equivalent of 10 football fields. 10 football fields, folks. An absolute miraculous feat of construction, to say the least. Now, what tools did they have in those ancient times? It certainly wasn't our modern equipment. What blueprints did they follow? Who was the foreman, and how did they build this incredible structure? And what obstacles did they have to overcome? What an amazing building process they undertook. In one sense, we too can be part of a building process. Each day offers us the opportunity to build the next great wonder of our world, your world, and we too can overcome any obstacles that we confront. We can build that which we desire. All we need is the entrepreneurial spirit, the spirit to avoid wasting precious moments, the dedication to work hard, and the belief that we can manifest our dreams. We must be dedicated to do a better job each day, to do it better than anyone else can do it, to do it better than it needs to be done, and to not let anything stand in the way between us and the difficult tasks that each of us must overcome. There are traits that built, or I should say, these are the traits that built the world, and these are the traits that build our world. The truth is, if we observe a really happy person, we'll find them building a boat, writing a symphony, maybe writing a book, educating their kids, looking for dinosaur eggs in the Gobi Desert, or perhaps developing a better trading plan. The person, or this person, is certainly not searching for happiness as if it were their goal or their outcome. Instead, they will be happy in the course of living 24 crowded hours of each day, not wasting a single moment. Within you, within that creative genius of your mind, lies the real opportunity. Within you lies the insight, the foresight, the strength, the courage, the faith, and the freedom to construct the wonders of your world. Let's go check out the construction builders of the markets here right now, the bulls and the bears. We've got the Dow futures off about 15 points, trading at 14,867. ES Mini flat right here, trading out at 1606.75. NASDAQ futures up about 4 at 29.21. King Dollar on the move, up 40 ticks right now, trading at 83.66. We got a lot of movement here in the currency market. We'll take a look at the euro, US dollar, the Japanese yen, the British pound. We can look at them all. We've got gold trading down $3 right now, out at 12.52. We got silver up 4 pennies at 19.62. Light sweet crude up 80 cents at 98.79. If we take a quick peek around the globe here, over in Europe right now, we've got the DAX down hard, off 1 2/10%, off 97 points right now. We've got the FTSE off 30 points, not really too bad, about 0.5%. A little bit of a mixed bag in Asia last night, really a flat market at the I shouldn't say flat market. The Hang Seng was down 0.7%. That was up 144 points. The Shanghai up 12, up 0.5%. And the Nikkei, our good old friend the Nikkei, up nearly 2%, up $246. Again, our call number, 877-927-6648. We can take a look at your stock chart, anything that you would like. Let's begin by taking a look here at the ES Mini. Let's go see what it is doing. We're going to go take a look at the EKG because there's a buying opportunity that is just in front of us. Yes, we had colossal, did I say colossal? We had colossal failures in the marketplace yesterday, but the market's still not ready to go down. It's getting close. You know, it's like a bacon, I guess, a loaf of bread. It's in the oven. It's rising just like the market wants to. It wants to rise a bit more before you take it out of the oven, and then you start to go ahead and butter it up. And in this case here, we're taking a look at the ES Mini. We're looking at the 30-minute chart out here, and we're taking a look at a really nice Gartley buy pattern that could be setting up here. And that could be setting up, would take the ES Mini down about another 6 points or so, 5 to 6 points, right around the 15, we're going to call it 1,600, even Steven. What we have down here, if you're watching us on Tiger TV, you actually can see the Gartley butterfly. If you're listening on the radio, I'll go ahead and describe to you what it is that we're looking at. But remember, you can catch the live stream of this radio show. That means you get to see the charts by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with 3 smartphones. Go ahead, click on that. The show will stream live. You can always get to the archive to rewatch this on Channel 9. And what we're taking a look at yesterday, when we left the show at 11 o'clock, because we do 2 hours here in the morning, at 11 o'clock, at 10:30, we saw that the market, the ES Mini, had gotten up to the 1620 area. We also noticed that we were really moving into that extreme overbought condition. And what we said there, because it works on a continuous basis, is just simply the market needed to work that off. And to work that off, it was either going to travel sideways or pull back. On the pullback, you're simply measuring the depth of the pullback, the volume of the pullback, to understand what is going on. And what we saw here, right at the 12:30 time frame, we had the bears show up for work. A bearish engulfing is what they created. It was really the first bearish candle that we saw on that move up. And if we take a look at expansions, we can take a look at expansions of swing points. We can take a look where price was going yesterday. We'll go from the high that came in at 3:30 in the morning. This was on June 28th. We go from that high at 1614.50 down to the low that came in on Sunday evening at 9 p.m., down at 1593. The 1.272 expansion of that was 1620. If you take a look at 1620 and a quarter, if you take a look at what the ES Mini got up to at that 12:30 session, it got up to 1620.50. These numbers, folks, I can't tell you why they work. I can only tell you that they do work. And you want to make sure that you include these in your arsenal of trading tools out here, because we did the 1.272, or the ES Mini did, and then it created that bearish engulfing candle. That was your signal that the market was not going to likely move sideways. Instead, it was going to go ahead and pull back, and that's what we saw. Now what we see here, the market goes ahead, pulls back into the close yesterday, really pulls back into the 5 p.m. time frame, gets down to 1605.50, goes ahead and makes a retracement. Now look at that retracement. Is that beautiful or what? The retracement I'm talking about, if you're listening in, is when it goes from the low of 1605.50 up to the high that came in at 3 o'clock this morning, 1614 and a quarter out there. And that, folks, was a sweet 618 retracement. That really sets up the possible A to B equals CD down. The A to B equals CD down, let me see if this actually takes us right down to that 1600 mark. It does. 1599 and a quarter would be your 1-to-1 A to B equals CD. But first, it's got to pass the B point out here. That B point is at 5 p.m. time frame of 1605.50. When it comes to the construction workers, I can see on the 30-minute chart here, they're actually out here building right now. They're saying, you know what, Steve-O, we're going to defend this territory. We're going to defend this 1605.50 because you've got a bullish engulfing candle. If the bulls cannot defend this position, what we're looking for is a move down to about 1599. That's where we will see the market bounce from here. The market bounce. We'll take a look at the daily chart out here. Again, that loaf of bread that's in the oven, it is still rising. It's still rising. These markets still want to travel a bit higher before they can be sold. But yesterday, the market gave us a tremendous amount of information out here. The information that we were looking at beforehand was that we want to see this market rise and give us the best opportunity to go ahead and short the market. And now is a bit too early in my opinion out here. Boy, I'd love to see the market come back just a little bit more. Come on back to that fishing hole for us. Get down to that 1599, 1600 level out there, because what you also have is you have a 0.786 retracement coming off that 9 p.m. low on Sunday night. And also from the 9 p.m. low up to the high that was put in at 12:30 yesterday, right here at 1603. And right now we saw 1604.75. That was actually the 1.272 expansion, or we haven't gotten down there yet. But at 1603, you got the 1.272 expansion of this B to C swing point. So there's a lot of reason for this market to go ahead and bounce. This is just one of them, being this pattern. Now, you'd always have to wait for the bulls to show up. And as I say, the 30-minute chart is really one of the best time frame charts that you can use for trading. It just simply works well. You want to make sure that you're paying attention to when the market gets into that extreme overbought and extreme oversold condition, and then you just wait for the cavalry to arrive before you make any changes to any trading decision that you have out there. If we go take a look at what's going on in the currency market, I did mention the currencies on the move here. The currency market that we want to be paying attention to is this one, and this is the Euro-Japanese yen. The Euro-Japanese yen, it too got into the extreme overbought condition, did that at 3 o'clock this morning. We got that little bearish engulfing candle. It pulled back but I think the pullback on this is done. It too wants to rise, and that will take our markets north. 877-927-6648. Give us a call, folks. We can take a look at your stock. We'll be right back.
Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Well, welcome back. You know, I spoke about building as we kicked off this morning's show, and inside my newsletter service, Mastering Probability, we're building something today something I believe that you want to be aware of. You can go test drive that newsletter absolutely free, no charge to your credit card. It's the first time that we have ever done that. And so go to the homepage of TFNN.com. You can test drive it for 2 weeks absolutely free out there. You'll want to do that. I believe we're building the next great trade in our portfolio out there. Again, all the details on the homepage of TFNN.com. We've got another 6 minutes out here for the bulls to go ahead and build that bullish engulfing candle inside the ES Mini 30-minute chart out here. Let's say we get a pullback right now to, we'll do a couple of different A to B equals CD, because I believe that this Gartley pattern that we're taking a look at, this would be setting up the next A to B equals CD up. If we take a look at going from the 9 o'clock time frame from Sunday evening, now I'm going to first come down to the 1600 level. And that would be going, your A point would be the low here of 1593.25. Your B point's going to be the high from 1230 yesterday out at 1620.50. And the only question is, where's our C point? Is our C point going to be the pullback to 15.99, or was it the low that we came in at 9 o'clock? If it is a pullback to 15.99, that's going to give you a target of 16.27. So that's one of those numbers you want to write down on a piece of paper. Let's assume that for right now, the bulls decide they're going to take charge early of this trading session here, and the low came in as we were coming on the air at 9 o'clock, 16.32. So you got, 16.27 to 16.32 as your target area. Now, let's go over and take a look at the daily chart here on the ES Mini, and let's go see what we've got at 16.28 to 16.32 as we go ahead and we pull this back. Now, as we're looking at it, I'll go ahead and erase these lines off of the screen. I want to show you what it is that I'm doing. That way it makes it easier for you to follow along at home. As we take a look, we're looking first at the large A to B equals CD pattern that formed out here. That's the one that came off of the May 22nd high all the way down to the June 24th low last Monday out here. So if we take a look at the retracement, a normal retracement of any A to B equals CD pattern, any pattern that you look at, is always going to be the sweet 618 level. So as we take a look at that, we come down here, what we will see is the sweet 618 level takes you to 1635. I believe 1635 is very close. What did I come up with? Maybe about 1632 or so when we looked at the ES Mini on that 30-minute chart. So 1635, 1632, that seems like a normal range. That's a reason why we can take a look at that Gartley pattern, which has not completed yet. Remember, that doesn't complete until price would move down into about 1600. We're not there right now. We're at the 1606 level. So if we do see a move down to 1600, 1599, you can say, hey, that is exactly what it was supposed to be doing. Let's also take a look at the retracement level here, coming off of the high from June 19th. That's our C to D leg that we're going to take a look at. So we're going to go from our C point. Whoops, I grabbed the wrong tool here. Let me grab my Fibonacci ruler. We're going to come from that C point all the way down to that D level here, and the 0.786 area gets us to 1628. You can see here that for the last 3 trading sessions, including this morning as well, that the 0.618 level is what has held us in check here, and that's of the C to D leg. So the market is trying to chip away, is trying to break through that level so that it can get up to right around 1628 to 1635-ish, and that is where we will then see the market turn and start heading south. And with it being a light trading session today, a light trading session tomorrow, shortened trading day as well out there, and with the euro Japanese yen doing what it's supposed to be doing, that should give everything the strength that this market needs in order for it to move higher out there. So we're looking at that, and on the 30-minute chart here, as we come into 928, we're seeing the bears. I'll go switch back over here to the 30-minute chart so that we can monitor. We can watch this here for the next minute or so. Let me go ahead and erase this A to B equals CD off. And what we can see here, no bullish engulfing candle right here. So the bulls have only some of the bulls have actually shown up here on the 30-minute chart. And this says, you know what? Looks like maybe what we'll see is that 1600, that Gartley buy pattern actually form inside the marketplace here. And then we'll go ahead and see the market start to zoom. We'll see that red level actually go ahead and rise out there. If we go take a look at the U.S. dollar index, that's got a little bit of energy in it. It's up 42 ticks right now. We can see that coming off of the high out here from May 24th all the way down to the low that came in on June 13th, what the U.S. dollar index has now done, it has attacked the 0.786 retracement level, 83.72 so far today, on a fairly wide-ranging bar. What does that set up? That sets up a move all the way back up to the top to the 84.60 level, and that is on the U.S. dollar index. Now, the interesting thing here is if we go take a look at Goldilocks, which we'll do after we come back and see how the market opens, gold right now down 80 cents with the U.S. dollar index up 42 pennies. I would say gold is holding up pretty well. 877-927-6648. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Texas. You got the block 14 out at 14,960. S&P totally flat at 16.15. Composite up a buck at 34.34. Russell 2000 had a nice strong day yesterday, down 64 pennies right now. Google up 85 cents. Apple up $3 and change. That's up 0.7%. Microsoft back 17 pennies right now. Intel up 1. Cisco flat out here, leading the charge the upside. If you caught Tom's show last night, we had Amy Smith with IBD on. She was talking about this company here, Noodles and Company, NDLS, one of the IPOs out here. It's up another 8% here this morning, up $3.28. I guess these are some of the guys involved with this. We're a part of Chipotle out there. We got Netflix up $2.50, Tesla Motors up $3.25, Apple up $2.50, Onyx Pharmaceuticals up another couple bucks, Genuine Parts, GPC up $2 here, Celgene up $1.11. Nielsen Holdings up $1.25, and if we take a look at what's to the downside, DaVita Healthcare. We saw them trade down in the after hours yesterday. They're down 5% here this morning off $6 and change. Lin Energy, L-I-N-E, it's Lin Energy. It's off about 14% this morning off $5. You've got Linco LLC, must be related there. LNCO is their ticker symbol. They're down 12% this morning. Berry Pete Company, B-R-Y, off 8%, off $3.75. Fresenius Med, FMS, they're off 8%. Mead Johnson Nutrition, they're down $2.70. Maximus MMS off $2.60. And Green Mountain Coffee Roasters down $1.71. Again, our call number 877-927-6648. We're going to peek in here on the metals. We'll take a look at the commodity section. Actually, right now we've got gold here. Gold yesterday closing above that number that we were looking for. That was the June 27th candle out there. That high was 1244.20 out there. Very important when you're taking a look at candle formations and what took place yesterday. Remember here, the difference between what we see have taken place here yesterday versus all the way back when gold was making a low on April 16th. It is that candle session, that wide-ranging bar that we were taking a look at on the 15th. And gold, during the entire time period from April 16th until it actually broke that level, which was on June 20th, never got outside of that bar, never got outside of the April 15th bar. That's why at that stage I remain very, 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 did I say very? I mean very cautious on any move that we saw inside gold. A little bit of a different story here. Here on Friday we created gold created a bullish engulfing candle, and yesterday you closed back above the actual trading session from June 27th. Says that gold should at least come now and test the 1321.50 level, April 16th out there. Boy, you get inside April the 16th. And then that leaves a move all the way back up to the top of, in fact, that candle from April 15th out at 1495. That's what's going on in gold. If we go take a look at high-ho silver out here, we're going to see silver had a nice Morningstar reversal candle configuration on Friday. So you've got a nice area of support, that level being $18.18. It has not closed above the high of 1958. It's trading 1960 right now. Would nice to be to see the metals here act synergistically, if that is a word out there, and that would be a close above 1958 in the silver market. That then sets up a move here to the low of April 16th, the $22 area inside silver. If we go take a look at light sweet crude, we've been watching crude oil here. It's up 52 cents here this morning. It is trying to break out of this 12-point trading range that it has been in, and it has been in this 12-point trading range for a while, since a year ago, July 12th. 2012 is really we're going to call the beginning of the trading range. That's at the lows of 84.21. You could say the bottom of the range really down here at about 84.05, but $84 is good enough for me. The top of the trading range is where we're at right now. That is really the $98 level. So you're going from 84 to 98, maybe instead of 12 points. I guess my math says what? That should be really a 14-point trading range. So let's go in here. Let's change that. We're looking at really a 14-point trading range if I just did the math on the fly. Of course, I'm doing multitasking. I got several screens as well as all kinds of stuff going on in front of me. So I think we're looking at, let's make sure we got this. So 84 to 98, right? Is that what we're looking at here? Is the bottom here 84? Yeah, we're going to go ahead and use a 14-point trading range inside of light sweet crude. Now, Here's the interesting thing. If we take a look at this trading range, I'm going to go ahead and blow this up on the screen, and we can take a look at as price. What I've got on here, folks, for those of you that are listening in, I've got basically three different, we could draw a fourth one in here, but I have three different price channels inside this trading range. And what we are seeing here, we're going to start off with the trading range price channel going all the way down to the over on the left-hand side, the one that is in blue. And this is where you had light sweet crude September 17, 2012, get up to a high of 99.52. It goes ahead, makes its way all the way down with inside this trading range, all the way down to lows in that 84 level. And as soon as that trading range was broken, which happened to be on November 16, 2012, how coincidental is that? I just actually drew this in here. So that's when our markets here made a low, a significant low in the marketplace. We also saw light sweet crude go ahead and break that descending price channel out there. Price went ahead and pulled back and really tested the bottom of the consolidation level, and then zoom, moved higher inside this red area here, this rising price channel. And as it moved up there, as soon as price broke that channel, which happened to be on February 15th, 2013, price went ahead and started pulling back. Never made it down to the bottom of the price channel during that move. It went ahead and retraced all the way back up on April the 1st, and then it made its move all the way back down to the bottom of that channel. Now what we're taking a look at, we are seeing price here, a wider price channel out here, but we're seeing price move up here to the top of it. It's trying to go ahead and break out. If we do see a breakout, it says we're looking at a 14-point move inside light sweet crude. That says 98. That takes you to what, $108, $112 or so. Likewise, I would say, based on how we've seen these price channels here with inside this horizontal trading range, I would say you would wait and see wait for light sweet crude to actually break the bottom of this price channel before you would take a short position in oil out here. So you can put this together as well on your charting system, but you've got light sweet crude. It's up towards the top of its trading range. I would wait for it to break this current rising price channel that it is traveling in before going short, because it looks like $112 is really in the cards here if it can break out of this area since you're towards the top of the range. We go take a look at bonds, see what bonds are doing out here. Bonds really just small-bodied candles traveling sideways, working off an oversold condition out here, but certainly doesn't look intriguing to me, at least on the long side. If we take a look at natural gas right now, we have natural gas. It's also really trading sideways, having broken through that long-term rising price channel. That's the long-term channel that went back to our April 20th area. We're watching it, and what will happen here is natural gas should try to get back inside that level. If it can't get back inside that level, what we'll see is a move down to about the $3.40 area, and that will be your 0.786 retracement of the last leg up. That's off of the February 15th low, right around $3.12 all the way to the high that was put in on May Day up at the 444 level. Let's go take a look at the currency market out here. Let's go see what's going on first on the intraday charts on the 30-minute chart. You've got the U.S. dollar, Japanese yen, a little bit of a rocket ship here on the 30-minute chart, getting into that extreme overbought territory. So we should begin to see this travel sideways or move back to the left. Back to the left. Move sideways or go ahead and pull back out here. If we take a look at what this is also trading into, we're going to go ahead and take a look at the highs that were put in here. This is a 30-minute chart, and it's going to take us all the way back to May 22nd's high. So we're going to go from that high all the way down to the low that came in on 2:30 in the morning on June the 13th. What we can see here is the U.S. dollar, Japanese yen is moved above the 0.618 retracement, which was $99.80. Says that this currency pair should want to make its way all the way back up to the 101 level, 101.44 or so. Let's go take a look. We'll take a look at the daily charts on these as well. But let's look at the intraday sessions out here. We've got the euro, U.S. dollar. That has pulled back. Let's get rid of this A to B equals CD. It's really been consolidating here in a sideways consolidation range ever since about the time frame here of about 11 o'clock on June the 25th. So really with regard to our market, that sideways trading range taking you from about the level of 131.02 down to the lows of about the 129.83 level, which is right about where you're at right now. You're about 130 even Steven here We can also see that in the case of the euro on the 30-minute chart, it has moved into its extreme oversold territory. That says it needs to work this condition off, and it will do that by either moving sideways or going ahead and retracing north. You don't have a bullish candle here just yet, but the move lower inside the euro should be over based on the 30-minute chart. Let's go take a look at the 30-minute chart here of the Great British Pound U.S. dollar. That also moving into a kind of the extreme oversold territory, but it has a wide-ranging bar during that 8:30 session. So it's got a lot of work to do to try to take a look at any bullish move out here. I would say it's likely not going to do it. It's similar to that candle that we were looking at inside gold back on that April 16th area, the April 15th time frame. So as we take a look at this here, it would have to clear 151.78 out there. So it looks to me like this will just work sideways inside this bar before it then decides to actually trek lower. That is on the Great British Pound U.S. dollar. Now, if we take a look at the euro Japanese yen, this is the one that we want to be paying attention to here. Making a move, coming back to a resistance area, which was formed here at 3 o'clock this morning up at the 130.62 level. That's where we've got a bearish engulfing. You get a close above 130.62, and that will put the juice, that will put the energy inside the U.S. markets for that bread to raise just a little bit more, probably rise all the way up into at least tomorrow's close, and that may be the point in time when you start to put your shorts on, because it is, you're going to put your shorts on to go watch the fireworks somewhere. Hopefully it's going to be nice and warm out there, and that's when you might want to start putting your shorts on inside the U.S. markets. But I do not believe that today is that day. If we take a look at the larger picture here in the currency charts, we're taking a look at the euro Japanese yen. That's got this beautiful 0.786 Gartley sell pattern with a nice 1.618 expansion of the B to C swing point out there, so it's got some room to rise out there on the daily chart, neither overbought nor oversold. If we take a look at the euro U.S. dollar, we see again for now a 5 days in a row holding the 0.618 retracement level here, not being able to bust through that 130 area. If it does bust through there, you'll have a continuation pattern, no question about it. That'll take the euro down to 1.2887. That is its next move on its way down. But maybe we'll see a little bit of a bounce here. Where would that bounce be? If we go from the swing point high from June 18th down to the low that was put in on June 26th, it would be no problem at all for the euro-U.S. dollar currency pair to at least bounce to 1.3148 out there. That would be nothing more than a dead cat bounce. So if it can't bust them down, it should try to bust it up just a tad out there. If we take a look here at the Great British Pound U.S. dollar currency pair on the daily basis, we pull this back here. Let me get rid of some of these retracement lines. That set up a really nice Gartley sell pattern out here. Let's see, every Fibonacci level. Let's get rid of those and delete that. Start over. There we go. So you can see the nice Fibonacci geometry. You had a 0.618 retracement. That was coming off of January 2nd, 2013, the high out there, all the way down to the low of that hammer candle on March 12th. So you had 157.48. That was the 1.5748, I should say. That was the 0.618 retracement. Also happened to be a 1.272 expansion of your B to C swing point out there now. And as we take a look at coming off of our hammer candle low, that was March 12th, all the way up to the high that was put in here on June 17th. What we will see is prices below the 0.618 level. You can see that the difference here between the pound and the euro out here is the pound came down here 2 trading sessions ago, just sat there yesterday, and now has continued its way lower. And it represents what we really were taking a look at in the 30-minute chart with that wide-ranging bar saying that it really wants to go ahead and move lower out here. So the next stop down on the Great British Pound U.S. dollar is going to take it to 150.27 out here, weaker than what we're looking at inside the euro. Let's see, what else do we have out here currency-wise worth paying attention to? That looks like about all that we need to look at here. So let's go check out some of these. Let's go back to that 30-minute chart out here on the ES Mini out here. And so it did make it down. It did complete a bullish engulfing candle. Let me just erase this off of my chart out here. So this actually, if we take a look here on the 30-minute chart, and we look at the 9 a.m. session, you can see the open there was 1606.50, and the close was 1606.50 at 9:30. That gave us our bullish engulfing candle. Now we're seeing a nice wide-ranging bar on the 30-minute chart coming off of that low. That's really set up now our A to B equals CD up in the marketplace here. So we're going to take a look at our A point again, coming in at about 9 o'clock in the evening on June 30th out here. Your B point is going to be that 12:30 swing point high yesterday afternoon, 1620.50. That is its target out here. And the C point now being at 9 a.m. level. You can see coming off that C point with conviction, that says 1632 is on its way. 877-927-6648. How's up 45? S&P's up 6. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And that is the truth, folks. Right now we've got the Dow is up 43, S&P is up 6, Composite up 13. You got Google up a couple bucks, and Apple up 2% this morning. Let's go check in on the Apple. I don't know what I'm going to say, apple pie. And in fact, it is. It's right the 4th of July, so it should be some good old apple pie out here. Right now we're seeing Apple get up to that 0.382 retracement level, 418 and a quarter. If we take a look at volume yesterday, 13 million shares. To the upside, that's after making a low on June 28th with 20 million shares out here so far this morning. In the first 24 minutes of trading, you've got 3 million shares, so you've got a little bit of volume inside Apple here as it makes its way up to 436.38. What did Apple do? Apple made an A to B equals CD down, made a little bit over a 1 to 1.272. Now it came into the swing point here hot. The swing point we're looking at is April 19th. Never got down to test the low at 385.10. That had 21 million shares, and as it was coming back in there, it was coming in with about 21 million shares. So similar volume, but it was really accelerating as it came down there. It says Apple will be back down there. Right now, all it's doing is what it should do. Any pattern when it completes out here will go ahead and make typically at least a dead cat bounce. That's your 0.382 level. That's where she's at right now. 418 and a quarter would be that number. It's been up as high as 417.47. So in essence, that piece of it has completed. But I think more likely what we will see here, we'll see Apple go ahead and rise into the 436 level. If we take a look at the B point that it took out on an A to B equals CD down, I believe that was on lighter volume. That gave you the indication, okay, the move upside, a bounce would be likely inside Apple. That was the B point of May 16. That had 21.5 million shares. As that level was passed, it was done with 12 million shares, half the volume, 17 million shares on June 21st, and that's also another indication of why we're seeing the bounce out here. So it's going into 21 million shares from May 16th, already done 3 million shares here today. Looks pretty good, looks pretty square for Apple to get up to that 436-ish level out there. And that is for good old apple pie. We got Priceline on the move again here this morning. Let's go see if Priceline ever rescued all of those passengers on that island reversal, and it most certainly did here. In fact, it's right now today trying to take on new all-time highs. It's already been up there. That's getting up over the island reversal, which is a very bearish pattern. So you could also take a look at the opposite. If, in fact, you get Priceline to close above 847.33, then that becomes another momentum play to the upside here. Volume on that trading session on May 21st was 1.1 million shares. Coming into it yesterday with only 500,000 shares, I'd say a little bit light. And so far today, 118,000 shares. We'll see what kind of volume this has here at the end of the day. But this is really the darling of all the stocks out there. I know I pointed this out on a number of times, but let's go take a look at this. We'll put this on the monthly chart. And Priceline, for whatever reason, I don't know why, at least I don't hear it in the media out here. You come back to its 2008 lows, and you are at a price point of $45 out here. Let me do this here. I'm going to move this off to the side, and we're going to go ahead and find that Apple chart. There we go. I'm going to put this off here. And we're going to go ahead and pull up the Apple chart, and we're going to put this on the monthly basis. You know, it's all about Apple, and I think Priceline has actually loved that it's been all about Apple because they have been able to fly underneath the radar screen. So if we go back to that same time period, the October lows inside Apple on a monthly chart out here, we'll go all the way back. See if I can go back to the October. Well, I'm going to go back to its 2009 lows when it traded for $85. But let me see here, October of 2008 now is really up more towards the high. So in this case here, you're taking a look at Apple, January 31st, 2009, at a price point of $78.20, got up to $705. Take a look at Priceline here. Priceline actually starting from a lower price, October of 2008, at about $45. It's traded $8.44. That is the darling out there, just as you folks are. Have a fabulous Tuesday, terrific Tuesday. Stay tuned. The Money Master Show is up next if you're off to start your day. Have a great one. Look forward to seeing you soon. Take care, folks. Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.